I think a lot of people believe you can't do both. At NVC, we believe differently. I think these are two worlds that should collide. I think the impact investors need more technology, need companies who have that sort of high growth mentality, that sustainability, because what you encounter in the impact investing world is sometimes more harder business models, a lower growth, um, a lot of grant dependence. So for example, I think it's super beneficial to bring sort of that VC mentality to that side of the equation. And then how can you bring that impact mentality to the VC world? So that's sort of our vision, what we're trying to do. But it's not easy.
Hi, everyone, and welcome to La Frontera, a podcast dedicated to exploring the dynamic startup and venture capital ecosystem in Latin America and the innovators behind it all. We're your hosts, Cyrus and Tom. If you enjoy this conversation, we invite you to subscribe to our newsletter where we announce new episodes and share additional insights and resources for founders and investors alike. We'd also like to invite you to share this podcast with your friends and to leave a review on Spotify, Apple, or YouTube to help more people discover the show. We love hearing from our audience. You can connect with us on LinkedIn and Twitter by searching for La Frontera Podcast.
Hey everyone, welcome back to another episode of La Frontera Podcast. We're here today with a really special guest, Daniela Pacheco. She's the managing partner at New Ventures Capital, or NVC. I'm really excited to speak with Dani today. She's going to tell us all about impact investing in Latin America and the certain sectors that we haven't had a lot of chances to learn about, like healthcare and femtech specifically. So Dani, thank you so much for being with us.
Great. No, a pleasure to be with you guys here in this podcast and to share our perspective of Latin American investment.
Great. Well, let's start. I would love to hear kind of a breakdown of NVC, kind of geographically where you guys invest, what you focus on, the different sectors and everything.
Great. So New Ventures Capital, we develop thematic funds to solve social and environmental problems. We are part of a New Ventures group who has more than 20 years of experience mobilizing resources, knowledge, and capital for impact investment. The fund was born around 5 years ago, and we identified that there was a gap in the market where there were a group of family offices, foundations who were doing a lot of philanthropic work, but we're looking for more sustainable solutions for their impact. And we started working with Fundación Botnar, which is a foundation in Switzerland, and they had a very strong focus in investing and impacting youth generations. So they launched this program and co-designed it with us, where we launched a $20 million early stage investment fund focused on impacting youth generations in Latin America. And that means investing in healthcare, fintech, employability, climate. So we have a pretty big scope. But during our work, we have focused a lot in health tech. We came across the opportunity to develop a fund focused on women's health. Was the first in the region. And through that work, we designed and mapped around 400 companies in the healthcare sector. We were sort of debating that challenge that there were not enough companies in healthcare. I think that's a very common perspective in the LatAm landscape. We know that less than 5% of funding goes to healthcare. And we have these huge problems in the region that require a lot of capital and a lot of entrepreneurial talent. So that has been one of my passions that has developed throughout my career. How can we mobilize capital, and how can we also mobilize gender smart capital in order to have a bigger impact and have better returns? So New Ventures Capital works with different funders, with different foundations in order to help them scale their impact in Latin America. And we are in charge of deploying the capital here in the region and try to make a case for impact investing, not only in terms of social and environmental impact, but in terms of return.
Yeah, it's very interesting, kind of the unique philosophy that you guys have and perspective you take on impact investing. Definitely want to dive a little bit more into the specific funds and kind of way in which you invest. But first, I want to hear a little bit more about you and how you got there and how you developed kind of a passion for for venture investing and then impact investing. So I'd love to hear kind of where you came from and the steps that brought you to NVC.
Yes, of course. I come from an entrepreneurial family. My grandfather built a very important financial group here in Colombia, and my father has been a very active investor in Colombia and in Latin America. So I grew up in a family of three girls. I'm the youngest, and we were always challenged to become investors and to try to build wealth and continue that immense legacy and responsibility we have. So I think at a young age, since I was 16, I started my own company with my father. We started a chain of body care stores. So I was always fascinated with entrepreneurs, their grit, their resilience. So I applied to Babson, which is one of the a very known school in the US focused on entrepreneurship. So there I received my basis on, well, what it requires to be an entrepreneur. And then I started my career in New York working in a startup, but eventually the homeland called. I saw there was a lot of opportunities to develop the talent in Latin America to solve social and environmental problems. So I started my career in Endeavor, which is a huge organization in more than 60 countries that helps high impact entrepreneurs. And I became very good at finding companies. I think that was the first time I realized the importance of my network and the importance of being in connection with different stakeholders. This was almost 13 years ago, where the ecosystem in Colombia was developing itself. I met Rappi when it was in a pitch deck. So you can imagine what the ecosystem was back then. So I've been living this huge, I think, boom in Latin America. I've witnessed it through Endeavor. It was a great experience because they do harness a lot of entrepreneurial talent. So I became very good at looking for companies and working with the Endeavor team to analyze which were the best companies. So I think that gave me a really good groundwork. Then I worked in a health tech startup in product roles. I wanted to learn what it meant to be in the trenches of a startup. At Endeavor, you were always giving advice, but really did not know how hard it is to build a startup. So I think that gave me a very interesting expertise in order to analyze product, user experience, and build beyond a financial acumen, tech expertise, which I think is something that is incredibly valuable in this world and when I'm investing. After that, I worked developing investment strategies for family offices. Then I worked at T-Valley, another fund here based in Latin America from one of the first fintech founders in Colombia, Mauricio Hoyos and Andres Alban, who have an amazing company today, managed over 17 companies. So always I felt very attracted to working with entrepreneurs. I've always questioned if I should be an entrepreneur myself. But I believe that as fund managers are entrepreneurs in our own right. We have to do fundraising. We have to build ecosystems. So I was always attracted to that part of my job. And that has led me to being the managing partner of New Ventures Capital. I joined 3 years ago, grew very fast, built the area, built what New Ventures Capital is today. And I'm very excited to see what the future holds and how we can continue to contribute to the ecosystem. Now, learning and having lived over 13, 14 years in these roles, also creating a big passion for female entrepreneurs, for diversity as a competitive advantage.
Amazing. And I wanted to click on one thing you said there. You said you've always considered being an entrepreneur, but it seems like you've been in the investor seat the whole time and ultimately decided to stay there. So can you give us maybe a time where you almost made that jump, or like an idea that you had or tried to pursue, and what ultimately like made you decide to stay in the investor seat? Because that's something that Cyrus and I talk about all the time. It's like, wow, it would be amazing to jump off and start a company right now. But there's, something that kind of brings us back.
It's definitely a dilemma because I think about it today as well, what it would be. For me, what led me to stay in the investor side was sort of the dynamic environment and the variety of working with different industries, different entrepreneurs, sort of working in one idea. It had to be like an idea I was very, very in love with to dedicate all my time to one sector, one solution. But back when I graduated from my master's at USC, I wanted to build a chain of clinics for in women's health. It has always been something that I have followed. And today, I've invested in similar models, one in Mexico. So it's something I debate. But now that I've been in the investor seat, fundraising and building a fund and understanding what it takes to actually raise money, you realize that investors are entrepreneurs as well. We suffer from the same cycles in the market. People expect immense results from us, investors. We have to give great returns. It's extremely competitive. So I do believe that there's a side that is very entrepreneurial. You have to be scrappy. You have to be resourceful. You work at your own pace. So I think there's this similarity, but I'm still waiting to maybe I'll fall in love with a solution or fall in love with a problem that will eventually lead me into starting a startup. But for now, I'm enjoying my journey as an investor and catalyzing the growth of entrepreneurs.
Yeah, it's almost like your impact is magnified when you're in the investor seat, right?
Yeah.
Because you can, basically touch so many startups.
Definitely. I think that's the funnest part of the job. One day you're seeing a deal of women clinics. The other day you're analyzing internet access in rural areas. So I think that for me keeps me going, and it's incredibly exciting.
So talking about starting something and impact as well, can you tell us a little bit more about Empodera and your role there and kind of what you guys have been doing?
Yes, so Empodera, we launched it 3 years ago after running an acceleration program. So New Ventures Group has a very interesting model in developing funds because we have an area department based in Mexico that runs acceleration programs. So that allows us to do mapping and landscaping of what type of startups there are. So it all started 3 years ago or more, about 4 years ago, when they launched the first acceleration program focused on women's health that allowed us to map the entire sector, nonprofits, profits, how does it work, what type of companies there are, what size, what ticket, what type of financing mechanism there is. So it was an incredibly fulfilling experience to really build a fund that responds to what there is in the market. I think that's very important in Latin America. So Empodera has been a very bittersweet run because we eventually did not close the fund. It was a thematic fund. We believe that the market wasn't ready for it yet. We're seeing funds similar in Europe. We're seeing funds similar in the US. But we faced immense resistance. And are there enough companies? How are you going to do the cherry picking? There's not enough companies in healthcare. Woman-led, what does that mean? Are you excluding men? So it was very challenging, but I feel that we learned a lot and we gained a lot of expertise in the sector. We definitely believe that gender smart investing is necessary in healthcare. And today we merged with a bigger fund, a European foundation where we're going to work healthcare and climate solutions. So a bigger fund with a bigger scope. But we're still with the fund we have right now with a Botnar Foundation investing in women's health. And as an angel, I invest in women's health as well. I think that's where put your money where your mouth is. So I think that is the first step of building my own personal portfolio in order to prove the thesis. And we've been doing pretty well. So I think it's been a great ride. And I believe the market sooner rather than later will be ready for innovative funds such as Empodera.
Yeah, that's a great point. Do you think there's sort of like a chicken and egg problem where there's not enough funds investing in those sectors and that's what's driving not enough, I guess, startups in those sectors? Or do you think that there are quite enough startups in the sectors and investors are not seeing the vision or the impact?
I think investors need to be much more active in looking for the companies. I feel the health tech sector in LatAm is a little bit more unstructured. If you see fintech, well, they have huge communities, they work together. I think now we're seeing strides in the ecosystem to unite everyone. And that's sort of what we've wanted to do. But I think investors have the wrong perception about healthcare because they believe it's how do you scale into different regulations? But the same problem with fintech, right? If you're going to go to Colombia or to Mexico, you have different regulations. There's a public sector that affects a lot, and that scares a lot of investors. But what we've been seeing is that there is a very dynamic exit strategy, maybe a little bit more ahead of VC, maybe more private equity, but definitely there are big transactions happening. There are successes that are very representative. And I think investors have to be more open about finding companies. I feel sometimes in LatAm, investors are a bit more passive. They hope the companies come to them. And that's where New Ventures Capital is a little bit the other way around. We actively look for companies and for deals. And I think in this ecosystem, you have to get your hands out there and be in the street talking to founders. And I think now we've proven proven that hypothesis. There are enough companies. And we've also proven sort of saying, is it only women's health? Or if you're investing in a diabetes company that has more women clients than men, that's considered women's health as well. So how can you also expand the scope to help those health tech founders see women and see their clients and build for those women who are actually making the decisions at a large scale in the region?
So you did mention something that I'm kind of curious about and would love to dive into a little bit. You mentioned that the majority of VC funds in LatAm are expecting inbound, so folks to come and reach out to them. You did mention that you guys are pretty actively searching for companies. Would love to learn a little bit more about how that looks like within the firm and what your thoughts are on that.
Yeah, so I think that takes me a little bit back to Endeavor. When I was an analyst looking for companies, I literally started with thresholds. I had to talk to 2 companies a week, and that definitely built my network. I think I found great companies sometimes with interviews I would do. Then I would say, oh, so who built your website? Your website looks pretty good. I said, no, my website was built by Simón Borrero from Imaginamos, who ended up being the Rappi founder. That's sort of how I got into contact with them. So for us, we have a pipeline searching method that is systematic. Analysts have to look for interview 2 companies a week. So that means you have to build a network of investors. Of course, as you start maturing, you have other investors who send deals to you. You sort of build your network. They know that I'm interested in healthcare, so they send a pipeline over. But back then it was newspapers. Now we have LinkedIn. Now we have a bunch of accelerators producing great talent. But I think what we underestimate the most sometimes is that founders are the ones who know the best founders, and they know them in the operations of day to day. They know who they admire. So being really close to them, or to, for example, the company's CTO, my friend who's a CTO just joined this startup, and how can you really harness that network? So we are pretty aggressive, and we cold call, cold email, cold LinkedIn. Some of it works, some of it doesn't. But at the end, we do get to see around 1,000 companies a year between a team of 3-4 people. So I think you do have to get out there because the best deals are competitive. Sometimes you have to fight your way to win. And that only happens when you're talking to a lot of.
Yeah. And there is something to be said about, remaining curious, because I think your point about just asking about who built the website and then that's how you met the founder of Rappi. I think that's also something that's important. Just staying curious and then continue to build relationships within the ecosystem, because you never know where your next deal will come from.
Exactly.
Yeah, and Endeavor definitely like emphasizes building ecosystems and using like founder mentor networks. So that's definitely sounds like something that you've pulled with you since your career there. And I wanted to go back a little bit and talk more about healthcare. So when we talk to VCs in Latin America, typically the focus is on fintech, right? It's like 50% of funding goes to fintech, significantly lower percentage. Maybe you can tell me what that is. It goes to healthcare. But we know that there's a lot of gaps in healthcare, like there are in the US, although there are a ton of like healthcare startups in the US. I'm sure there's a lot of gaps in LatAm as well. Can you kind of go through like what are the kind of the biggest issues you see in the healthcare system? I'm sure it varies, country by country, and where you think sort of tech can come in to solve these issues. And maybe you can give like an example of a specific startup that you've invested in or have looked at that kind of, I guess, encapsulates the opportunities in investing in healthcare.
Yeah, so I think the main problem in healthcare is access. In Latin America, I think, I'm not sure if I'm right, but 170 million people have no access to healthcare. 70% of them are women. So for me and the work that I've done, I think one of the biggest problems in terms of access is that there's only 4% of women in managerial roles, while 80% of decisions are made by women in Latin America regarding the health of their families and their communities. So this was the big aha moment when we built Empodera, sort of realizing the disconnection there is with the final client and the teams that are building technologies. We launched an acceleration program for healthcare companies back in 2023 called Health Heroes, sort of to showcase the pipeline we were building and to show investors what the potential of these companies. And what we found is pretty amazing, because we had companies with 80% of their clients were women, and they had no women on the tech team, on the product team, on managerial positions. So I do feel that disconnection is something that savvy investors have to sort of look at and see how you can really have startups that talk to the real consumers. When we talk about access, that goes beyond so many problems. So in my case, in my expertise, we know that one out of every mother in Latin America has a child before she's 18. So the sexual and reproductive gap is huge. And that's not just a problem. It's a social and economic problem because these are women who never go to school, who never become productive. So I think for me, that's sort of the edge point or the entry point where we could solve so many things. If women could be healthy, their families are healthy, their communities are healthy, and it's going to impact men as well. I feel part of the discussion sort of when we were pitching this is, are men excluded? And the reality is that they're not. If you have a healthy mother, she's going to have that great impact. So for me, I think in Latin America, how can we bridge that access requires a lot of technology. After the pandemic, after COVID, we saw these huge advancements because we had telemedicine, this huge surge of technology of startups who could now provide access to a doctor in Amazon areas, in rural areas where before people had to travel 2, 3, or 4 hours to have a mammogram or to get to their doctors. So I think that is very important. I think one example of those types of technologies is an investment we did in Brazil called Huna AI. And Huna uses blood samples through artificial intelligence and biomarkers to do early detection breast cancer. So that is hugely transformational. A mammogram is extremely expensive. It requires a specialist. So a small health center in a small town in Colombia could never afford this. But now with the same blood work you do for any other exam, you could actually get early detection. So I think those types of solutions are democratizing access to diagnostics, to primary care, is something that is really moving the needle and helping society as a whole.
So you brought up something really interesting. You mentioned the pregnancies, the rate of pregnancies under 18 in specific communities, and you mentioned something about I guess like education and career mobility. Is that something where investing in education in some of these communities where these pregnancy rates are a little bit higher among girls under 18, do you think that's what will help contribute to reducing those rates of pregnancies below 18 years old? Or
definitely, and I think you hit the mark there because education is what sort of brings that opportunity for these girls to escape this cycle of poverty. But the challenge is, how do you make a business out of that education in a VC model? And I think that's sort of the struggle. And we've seen it. We've seen great nonprofits who help communities. How do you fund them? And how can you build different financing mechanisms? I think it is the real question. And I think the real question in healthcare in LatAm is, are you investing with the best financing mechanism? Or maybe investors are not really considering the market. And in many cases, when we were starting to do the case studies of companies that we would invest in, many of them we would actually frame in debt mechanisms. So I think that's another question that is very interesting. Is it VC funding who's not really understanding these companies? And can we create other mechanisms that can really catalyze that impact?
Yeah. And I think on that note, something that's really interesting that I've always been fascinated by with just with emerging markets, but more specifically like Latin America, which is, I think the majority, there's a huge majority of micro businesses are all female owned, right, in Latin America. And I think that's always been something really special. So something I've always been kind of curious about is that where maybe not traditional VC would be helpful, but some sort of like micro loans or something like that to help women kind of, well, first of all, education is primary, right? Education is always going to be important. But the number two, helping women understand like how they can start their own businesses, monetize and grow their own businesses from there. What are your thoughts on that?
I think the micro lending market has sort of exploded here in LatAm. I think the democratization of access to credit was long overdue, and now we're seeing it. There are great companies who are doing this. One of them is Kipu in Colombia, who's working with, for example, hairdressers and how to give them loans and get their companies going. And there are companies that have a lot of grit and are creating models, but sometimes they're not so VC backed. So that is sort of the challenge for them, that they are sometimes in a limbo between am I VC or not VC. but definitely we have seen a surge in those type of companies, and we have analyzed them. We recently invested in Welly, which is a company in healthcare financing here in Colombia. And of course, credit startups have their challenges, and we know that. But at the end, if they are able to raise the debt, it's it's a very attractive business and with an immense scale. So I think we're going to see more of those. We're seeing a lot of alternative credit scoring as well. So more as sort of as a software as a service, alternative scoring as a service, which is more VC backed because you don't have to have the burden of the debt providers and all of that. And we're seeing these small foundations sort of integrating these alternative scores. So I think it's a very dynamic market, and we hope to see more in terms of microloans and microlending to sort of help this problem.
Yeah, and shout out to Muffin, one of your portfolio companies, for talking about credit scoring.
Yeah, definitely.
So then with NVC and your work there, it sounds like you'll invest in companies, even if they are fintech or data or something like that, as long as you kind of see that they're having like a positive societal impact. Can you talk about why or like how you define impact, and how does NVC define that, and what are the LPs, looking at when they're considering investment decisions, and what are they sort of like happy with at the end of the day?
So I think they're happy. I think so there's a lot of theories, frameworks for impact measurement. I think we have not hit the mark yet. There's IRIS, there's ESG, which sort of measures risk, but does not align at all with entrepreneurs. Sort of becomes like another to-do list on the due diligence. So what we developed in New Ventures Capital, because we're sort of that bridge from some of these companies do not define themselves as impact companies. They are VC companies. They are high growth companies. So how can we really sort of teach them how to start telling this narrative, how to start measuring? So we developed this framework, which is the impact empowerment workshops. And how do we convince entrepreneurs? Because, a startup, early stage, this is another workload that you're adding to the company, right? So now you have to measure this. So how do you align that with sort of the value proposition, the business model? We work with theory of change, which is a common methodology to define outputs and outcomes. But every company is so different, every industry. So we sort of work with the companies to define every individual KPI. At first, we have number of young people impacted, which is a number that, for example, for our LP means a lot. But right now, we're sort of challenging that and saying, well, what changes in the life of these people? How can we go even further? And I think that's what we're trying to do. It's costly to do this, to get this information. It is not simple. But I think entrepreneurs, as soon as they see it if you help them understand three things, that this is going to attract different sources of capital. Impact investing, VC has been down the couple of years, so maybe you could get capital from one of these impact funds. And we've seen this in subsequent rounds with some of our portfolio companies where we've brought impact investing. And we do believe that this helps retain, when you measure your impact, retain talent and attract talent. We're seeing younger generations super passionate about changing the world. So we do feel it's a tool for that. And the third one would be, how can they build this into their value proposition to create a customer loyalty? So I feel that once you align the entrepreneur that this is something that is going to help them and it's not going to be a burden, we've been successful in measuring metrics. But for example, the LP will impact depth and reach is something that you look for. And I think that those are the metrics that we're sort of trying to continue expanding with the entrepreneurs.
I feel like in the US, when I typically think of venture investing versus impact investing, a lot of the times they're kind of separated. And in my school, in my MBA program, for instance, there's a track where you can look for roles in impact investing or, venture investing. So it's really bifurcated. But the way that you guys look at it, kind of your philosophy, seems like you believe like the two shouldn't be mutually exclusive. So can you talk about how it kind of intertwines the returns and the impact and how that comes into play when you're evaluating deals, analyzing both the, potential return outcomes as well as the impact that you just talked about?
Yes, I think that's the eternal dilemma. I think a lot of people believe you can't do both. At NVC, we believe differently. I think these are two worlds that should collide. I think the impact investors need more technology, need companies who have that sort of high growth mentality, that sustainability, because what you encounter in the impact investing world is sometimes more harder business models, lower growth, a lot of grant dependence. So for example, I think it's super beneficial to bring sort of that VC mentality to that side of the equation. And then how can you bring that impact mentality to the VC world? So that's sort of our vision, what we're trying to do. But it's not easy. It's not easy. And the discussions in the investment committee are tough in terms of how do you balance financial returns and impact. For us, sometimes we do prioritize financial return. We are looking for that unicorn, and we hope that we could sort of work with them and to develop those impact KPIs and that impact mentality. And we feel we have a bigger impact with that formula than trying to have a social company build a unicorn.
Yeah, that makes sense. And that question kind of came from I visited some VC funds in New York, I guess a couple months ago now, and we visited one that was just a pure climate kind of impact fund. And I asked the guys there, so how has fundraising been for your new fund during this administration shift in the US? I'm not going to talk about my opinions on the administration there, but basically they said no comment, right? Because
yes,
they're kind of reliant on a lot of government grants and things like that, or government policies that encourage, corporates and other asset managers to, flow funds into impact focused funds, climate focused, ESG, that type of thing. So it makes it really tough for them,
yes,
kind of like these days. And that's kind of the issue, I guess, like with separating the two, when we're not focused, on returns and more just impact.
Yes, and I think definitely we've felt that shift in Latin America as well. I feel a lot of multilateral banks where the US is very strong are shifting their scope, no? So we come from a past administration that also diversity, all these subjects are flourishing. And now sort of that is sort of not so cool right now, if you're talking about that. So the anti-woke movement and all that stuff. But I do believe we do need sort of that regulation to help the sector, because that's sort of what motivates private capital to come in. I feel that's major differences between LatAm and the US is sort of that in LatAm, there's a lot of that institutional capital, but the family offices, the high net worth individuals are still not jumping at the opportunities. So I think you do need favorable regulation. Climate investing has been decreasing in the past quarters and year. So it is a challenge for the industry, because if there's less capital, there's less exits, there's less subsequent rounds. And I think it's a huge challenge on how are we going to navigate this, because there's so much innovation that still needs to be funded.
Taking it back a little bit to your thoughts on impact investing and how at the end of the day, it's just investing. I would love to learn a little bit more about how you applied that train of thought to the investment that you made in Fibrazo.
So I think Fibrazo was like sort of a combination. We saw amazing founders, amazing grit, amazing timing. So Colombia opened their fiber optic networks for different buyers. So that presented that has created a boom in terms of providers in the last year. So we go back to market timing that is super important. But while others dismissed Fibrazo provides last mile fiber internet access for emerging markets in the coast of Colombia. A lot of people sort of shun from the deal. A lot of people say, oof, this is operationally messy, it's capital intensive. And a lot of people did not realize sort of the lack of access there is and the dynamics of the market of these huge telecom monopolies who offer horrible service, high prices, and sort of Fibrazo comes in with flexible prices, plans, daily plans, sort of understanding the consumer, and they've grown immensely in the region to sort of tackle those big players. So for many, it's like, oh, you're gonna compete with these huge telecom companies, and once they realize you're there, this is gonna be a price war. And what we've realized is that internet access is such a necessity. It's such a huge problem that there's enough to go around, and there's areas in Colombia that no one is targeting, that there are an immense opportunity. So I think for us, Fibrazo was just not laying the cables, but was democratizing internet access in neighborhoods where strong players would never bet on this target because they think they're not going to pay, or all this wrong misconceptions about certain populations in Colombia. But we backed the founders because he understood both the field. He had worked in Africa, he had worked in different continents, and he understood the spreadsheets, he understood the model. So where others saw risk, we saw resilience, and that made all the difference. And today, Fibrazo is one of our best deals, and we are very proud of the impact they're generating.
That's incredible. Also, really interesting that Colombia opened up their fiber optic networks to new ventures operating in the field. So incredible what the Fibrazo team built. But I want to touch on something that you've also mentioned to us, which is like the in 3 R's investment philosophy. How did you guys think about that when it came to the Fibrazo team?
So I think for us, and you learn the hard way, one of the biggest reasons startups fail is sort of team cohesion. And especially when you saw such a big boom in 2020, 2021, all these, I don't know, ex-Rappis, all these people who just started companies. So I think we started seeing sort of this boom of entrepreneurial activity, but we've had 2 companies that sort of have broken up because of that, because of the team cohesion. They fight. It's sort of a marriage, even harder than being married sometimes. So that for us is very important. And I was very lucky that in my master's degree, my USC professor, shout out to Christina Lewinsky, taught me the 3 R's, which are roles, rewards, and relationships, on how to assess team cohesion, which is amazing. Because you really want to know, do you have the right roles? Are they being rewarded enough? And sometimes you see this in teams, right? You see the CTO, who is the heart of the team, who has 2%. So he's probably going to leave eventually. So that is a flight risk right there. And relationships, I think teams that have worked together before. So what we saw sort of in the boom of startups was that people actually co-founded companies with people they had like met that year. And startups are so hard. It's so hard that you really need to be very connected to your founders. So for example, Fibrazo had that. So Gustavo and Emiliano had worked together. They had been in the trenches together. They were both Argentinian, migrating to Colombia to build this business. So you knew they had immense skin in the game. They had moved their families here. They were living in Cartagena, which has immense complexities in every sense. So sort of understanding that skin in the game that entrepreneurs have, and what will you lose? Because you sort of had this generation of entrepreneurs who were very young, and their mentality a bit is like, okay, I can do the startup and tomorrow I'll do a new one. But that's not what you want to an investor. You want someone who's really going to cry for the company, who's going to lose a huge, their opportunity. So I think we're seeing that. We have assessments about the personality of founders. We assess how responsive they are to feedback, to questions. And what we found is that the most talented people are super open. They are super willing to give you access to all the information. They have nothing to hide. They answer questions respectfully, but you sort of, in the due diligence, try to test that with entrepreneurs, and you start seeing traits that you sort of know. Entrepreneurs are egocentric, narcissistic. How do you evaluate that? Is it the good type of narcissistic, or is it the one that is not going to pivot when he has to and is not going to listen to anyone? So you start sort of getting practice. And I think for my advice for any investors, double down on the team, on the relationships, on is it fair, the rewards they're getting, are the roles assigned properly? We see a lot of co-CEOs, we see a lot of mechanisms in their organizational structure, but at the end, there has to be a leader. There has to be someone who does the last decision. And hopefully that person is going to ride and die for that company and that idea.
Yeah. No, I think there's definitely something to be said about making sure that you have good relationships with your co-founders. I've seen too many businesses go downhill after relationships fell apart. Yeah. So anyways, I'm glad Tom and I know each other for at least 7 years. Okay, Otherwise, so we're not sure what will happen with La Frontera. Yeah.
Yeah. Well, we're fine because I started a little business with one of my other friends a few years ago. That caused a lot of issues as like first time founders that were also
all you need. And then your stuff starts drinking liquid.
Yeah, it's
not
like
that, it necessarily tastes good. can taste great, you know.
Yes.
Yellow was great for me, but
Yeah, I'm just like any other VC that loves
what?
investing in second-time founders because the first-time founder has probably made mistakes. They've learned from it. So
Yeah.
it's like they got a free education.
Yeah. And then aside from evaluating the team, which is definitely super crucial, especially in early stage investing, you also talk about how market timing is super important. So can you talk about how you kind of like evaluate and analyze that when you're looking at a specific opportunity? And then I guess like maybe a general like sort of thesis around one of your funds as well.
So I think the world is full of big ideas. There was the wrong timing. And at the end, market timing can dictate even more than you could ever imagine. So I think for us, of course, we do all the analysis about trends. So what is sort of the trend that is triggering an inflection point in the market for a new technology to be adopted? What is changing? So for example, for femtech, we have a new generation of women my age who are tired of going to a gynecologist that doesn't really provide information. Now she's productive, she's economically stable, and she wants a better service. So sort of what is changing in the behavior of the economy, what triggers that big question of why now? So I think that is something that we doubled in a lot. So we look for obviously statistics on growth, a lot of investors, double-digit growth in markets, all that stuff. But what regulation patterns are changing that could also trigger, because you're actually demanding exponential growth, and exponential growth is not going to come only by the solution. It's going to come from sort of a movement and a change in patterns that is going to bring that. So I think we do a lot of research, a lot of statistics. We obviously will stress test sort of if the market is growing at this rate, the company, how can it grow faster? So I think I like to dedicate a lot more time in market because, you know, the idea can pivot. They can change, they can find another business model, but the market is sort of what's going to dictate success, that I believe. And now you see it, for example, capital markets. Is there enough liquidity in the market to launch another Rappi? No, we're seeing sort of all that. For example, when we've learned the hard way, but companies that did micro lending in education and all that stuff, well, the interest rates went up, which completely screwed us over. So you have to have a temperature of that market as well. And what are the debt providers looking for? And how many big debt providers are there in Latin America? So I think we do a lot of also of top, down, and bottom up analysis. To be honest, most entrepreneurs really bullshit their market slide. We always see the billions, the trillions, but it's really like not real. So you really have to never take that for granted, because everyone is going to tell you they're going to win the 5% of a $10 billion market and they're going to be super successful. So we sort of really try to find those trends that indicate success.
Yeah, I like to think that the TAM for La Frontera is $3 trillion. So get in now while you can.
I mean, there's so many ways that you can calculate it, right? So
yes,
we're just not going to show our formula.
There's no right answer.
Yeah.
So, and it's a lot of debating, but we do try to challenge founders on like, okay, yeah, you say there's 10,000 small companies, but which ones can you really target? Not like get more granular on that and try to challenge that. And also the competitive analysis, we still dive a lot in that. And at first it was like, no, so it's only comparing startups, but there's so many traditional solutions that people are solving the problem so many indirect ways that sometimes the competitor list is much bigger than you would ever expect when we're doing that analysis.
Yeah. So talking about the market analysis and just like the market opportunity as a whole, something that you did mention that I want to touch on that you mentioned in the questionnaire was blitzscaling, which I absolutely loved reading. And you mentioned that you don't believe in scale. You don't believe that scale is always the most ethical or even the most strategic goal, and that you value companies that are able to, I guess, build sustainable ventures that solve real pain points quietly and effectively. Would love to learn a little bit more about how you guys are thinking about that.
Yes.
And then how that plays into your exit strategy, since traditional VC firms tend to prioritize scaling quickly so that you have a larger exit to maybe like a larger company or like an IPO, et cetera, and you capture a larger percentage of the market share. So we'd love to learn a little bit more about your thoughts on blitzscaling, and then, you know, companies that they're not capturing such a large part of the market share. Yeah. What do their exit strategies look like?
Yeah, so I think this is like a question that post 2020, 2021, VC in Latin America has had to reassess. So I think we sort of copied the model from Silicon Valley. We have to do blitzscaling. We have to scale, you spend a lot of money, you buy these customers in the B2C, you do this huge acquisition, you position yourself, and you spend millions and millions of dollars. And the reality of the ecosystem was that there's no longer millions and millions of dollars. So this is sort of like the correction of the market that we've been seeing. And the companies that are sort of surviving, of course, there are immense success cases who are doing this and people who manage this. But I think a lot of VCs would also agree in LatAm that sometimes we're now talking about break-even companies. We are not talking about business models that work, unit economics that work, because there's not unlimited capital. So I think given the conditions of the market, and I am skeptical of blitzscaling, because especially in emerging markets where infrastructure, regulation, consumer behavior aren't always ready to support that growth. You see it, founders pitching to you saying that a year from now they're going to be in 5 markets in Latin America. And you think and you say, you think that's really possible to go to Brazil, to Mexico? So I think there was like this culture that maybe was a bit toxic of all this stuff in Latin America, and you have to keep growing, and you see all these amazing projections, and I'm going to $100 million. But the reality is that's pretty tough to do. And I think that sometimes saying no to hypergrowth is smart when you product market fit is fragile, or you have like your CAC is artificially low, or you have unsustainable incentives. I have companies in the portfolio today that had 300 clients in Colombia and had to close 170 clients because they were profitable and they couldn't raise their Series A. So what do you do then, right? So I do believe that the unit economics has to work from day one. So you can be a counter-cyclical company. There's no unlimited capital. And I think some of the best returns also come from companies that prioritize that unit economics, that build those local modes and moved sort of at a speed that they could manage. And I think, in healthcare as well. So I think scaling with discipline rather than speed alone often earns founders like the right to grow and investors the right kind of upside. Of course, blitzscaling is amazing if you could do it, but I feel the realities of the market have changed.
Yeah, that makes a lot of sense, and that ties into a lot of opinions that we've seen, especially over the past couple of years. Like you mentioned, like after the boom, you kind of have to rethink how does VC work, especially in Latin America, right? Because in US traditionally, like it's blitzscaling. It's that, right? It's like grows as quickly as possible. Like don't even think about unit economics. Don't even think about like whether or not, it makes sense. But in Latin America, it seems like kind of getting back to, okay, like how do we create a good business and how do we, sustainably grow it?
Yeah. So you're telling me I can't start a company for frog sweaters and grow it to like $1 billion in market cap?
Yeah, you can. Maybe you'll have to just do that one in the US.
Yeah, it's okay. I'll just
you'll find someone to fund that.
Yeah, actually talking about that and bootstrapping, I'm kind of curious. So for companies that don't raise VC money in Latin America, right? I feel like bootstrapping has been more common in the United States these days, especially since there's been so much talk about not raising VC money. Obviously, we've seen something similar in Latin America, but I'm kind of curious because in the United States, there's obviously like personal loans, things like that, other kind of business loans available, as well as like angel funds for these companies that are starting out really early so that they don't have to raise VC money. What are some of the options, some of the funding options for founders in Latin America if they don't go out and raise VC money? Besides bootstrapping, for example?
Yeah, I think it's the same networks of like angel investors, family and friends, corporates. We're seeing a lot of strength in corporate VC. Well, no, it's VCs as well. But I think, so for example, an example of a company that bootstrapped, we had a fintech company in payments who was unable to raise the $2 million they were looking for. We were committed, but we had to wait for them to close the round and raise at least 80% of the capital because we're followers. And the company at the end, they were wasting so much time fundraising. It takes a toll on entrepreneurs. You disregard the operations. It takes a lot of time. You have to meet with 100 to get at least 20. And they completely paused fundraising. And they dedicated themselves to becoming profitable and breaking even. And today it's a company that achieved 80% of the goals with less money. And so you're seeing that sort of grit that I think speaks very highly of entrepreneurs. I think that they are now more prepared than ever after seeing the funding cycles that we've seen.
Yeah, actually, that's a great point because something that I've seen with a lot of entrepreneurs is because of I feel like a lot of VCs have just been more conservative in terms of the checks that they've been writing more recently. And so what I've seen, just personally, maybe you've seen this as well, but a lot of founders have decided to maximize essentially the amount of money that they have so far, give up on funding for now, focus on essentially scaling their revenue, user base, et cetera, building more traction, and then restarting their fundraise a little bit later on.
Yes.
And I've seen the same thing happen with like angels, pre-seed funds, seed funds, et cetera, where there's been this sort of like flight to quote unquote quality. And folks are focusing more on traction these days. It's a really interesting shift, given everything that happened since 2021.
Definitely.
And one, I guess, kind of final thing I want to touch on is just the ecosystem as a whole, like in Latin America, and founders getting funding, and also, what sorts of people are the ones that are like investing in founders. In the US, we've seen like a shift over the past few years, and a lot of VC funds popping up that specifically focus on underserved founders, minority founders, women founders, because they see that a lot of the times, like actually, I think like the stats even say startups with a female founder actually have, higher revenue per dollar invested at the end of the day. And companies with women leaders have higher stock performance, and people are kind of like noticing these things. And then VC funds, often started by women, I'm talking about kind of the US in specific here where I see this, then go after and kind of these overlooked founders, and find amazing sort of investment opportunities. Where do you see that I know that this is something you've focused on a lot. Where does where do you kind of stand on trying to promote a trend like that in Latin America? Where do you kind of see it now, and where do you kind of hope to see the ecosystem kind of taking that initiative on in the future?
So I think a lot of it is coming from institutional investors, such as multilateral banks, who are very active. They are the one that fund the funds, so they have incredible power. And I think we've been seeing these policies, sort of how do you measure how many women are at the C level? How do you measure diversity, inclusion? So a lot of them are sort of leading those demands, and startups are forced to diagnose how is your inclusion. And I think what you mentioned is very important, because I think sort of we have this backlash with diversity and inclusion because people sort of see it as a nice to have. But I think the data speaks for itself, and women are incredible consumers. So I think it's for me, it's more about like a competitive advantage. And I think we are getting there. So the rates of women in boards in Colombia have doubled in the past 10 years. We have BlackRock, also big investors worldwide, who are demanding women in the board of directors, who are demanding this stuff because they realize it makes investment sense. So I think Latin America is going to follow that trend. I think we're definitely behind. There are very few women in the field. So sometimes in impact investing, are we investing in the founders that really know the problem? Or is it the founder who really has never lived the problem, is completely far away from it? And how do you sort of assess that the best way possible? But I think the trend is super positive. I think people understand that this goes beyond diversity and just makes business sense. But we need to strive to bring women to decision roles and to those investment committees that are going to eventually decide, because we're still getting very few funding in women. But I think the smart funds who are seeing it as an opportunity, and for example, the US that are building these super targeted funds, they're going to harness those returns, and they're definitely taking a first mover advantage into a segment that no one has explored.
Yeah, and I think it's totally part of just like the development of and maturing of the venture ecosystem and startup ecosystem in Latin America, because you really see it's very competitive with the companies kind of like at the top that get funding, especially in sort of later rounds like Series A to then all the way to like B and C. And everyone's kind of fighting over the same ones. But you see there's so many like overlooked opportunities in sectors and types of founders that it seems like you guys are doing kind of the hard work, the dirty work to like really seek out those opportunities. So I think you guys are kind of one of those that are driving that shift. And I think it's just part of developing the ecosystem.
Yes.
And then I guess, to wrap things up, like we'd Love to hear if there's anything that you would like to promote. Where can people, if they're more interested in learning about you and what you do at NVC, impact investing, fintech investing, anything that you'd like to share here for our listeners?
No, I think the opportunities in Latin America are huge. I think we're immense market. I think we're seeing incredible talent from these entrepreneurs. I think the challenge is expanding in many countries, scaling, but I think there's the talent to do so. I think there's a huge shift in what people are looking for in entrepreneurs. I think impact investing is growing despite sort of the recent geopolitical changes and sort of things that have happened. But I would invite people to be inspired by diversity as a competitive advantage. I would invite entrepreneurs to not be afraid to hire people who are different from them. This is a concept which is very common, but it's called homophily when you find teams that look exactly the same. And we do, as human beings, have a nature of hiring people who come from the same place, who speak the same way, who are close to us. But if you really want your company to build that next unicorn, the biggest advice is hire people who are different than you, who are going to question you, who are not going to be those yes people in your committees, in your board, and really harness that power to build inclusive companies. And I think it's an incredible tool for success.
Yeah, it's that, I guess, that quest for familiarity is what humans like. But I guess that's where that can lead to groupthink. So finding challenging opinions or differing opinions is always helpful.
Daniela, thank you so much. This was an eye-opening conversation for us, and I'm sure it will be for everyone who's listening here. But thanks for joining, and hopefully we'll see you in Colombia for Colombia Tech Week.
You're coming, okay? Amazing.
Yeah, we sure are. We're working on setting up some events. Really?
Hey, let us know. We're super happy to meet you guys in person. We're doing one climate tech event in Bogota and another health tech event in Medellin. So I'll share the invitations and let us know when you're here. We can have lunch or chat and show you around.
Amazing.
Fantastic. That sounds amazing.
Yes, it's going to be super fun. It's an amazing week.
Yeah, we're excited. I didn't get to go last year. Cyrus did. I haven't been to Colombia in a few years, but I'm excited to see how much activity there is, right? And I'm sure it's it grows like exponentially year over year. The number of events and the people that attend.
I still maintain my claim that Colombia Tech Week is one of my favorite tech weeks out there, hands down.
Yes, the Colombia Tech team does an amazing job.
Yeah.
And they work really hard. And today they launched the agenda. So we are.
Yeah, saw that.
And no, it's a pleasure. And the blitzscaling question, Rizier was my professor at Stanford. So I don't know if he'll appreciate.
Yeah.
I knew you, but.
We'll make sure to send him this podcast. Great. Thank you so much, Daniela.
Great. No, great. You guys, thank you for the invitation. Always happy to share and to invite more people to come and learn about Latin America and all the great opportunities.
Thank you for tuning in to another episode of La Frontera. We hope you enjoyed the show. You can listen to more great conversations on our Spotify, as well as on your other favorite streaming platforms. You can find us online at lafronterapodcast.com, and make sure to subscribe to our newsletter for show notes and to stay in the loop for new content. Ciao for now.